SkyCity Entertainment Group has faced many challenges, including its still yet to be finished International Convention Centre in Auckland. But its chairman is excited about its future.
We've got through this year and started to tick quite a few things off. So we've got a new CEO, we've got a new CFO, we've settled the DIA AML case, we've settled the DIA host responsibility case, we've settled our Austrac fine.
How would you sum up the tone of the action against this industry?
Well, I think it was well deserved, to be blunt.
This is huge.
Oh, this is huge, yeah. Wow. Wow.
Wow. Well, you know when the chairman's saying wow.
Yeah, okay.
It's
So
wow.
that will-
It's been years since anyone outside of SkyCity and Fletcher building has been allowed inside their most troubled project, Auckland's International Convention Centre.
Thank you.
The build began in 2016. It was meant to cost around $750 million and open 3 years later. 9 years on and over $1 billion spent, it's still not complete. This site caught on fire in 2019, burning for 10 days straight. No one was hurt in what was deemed an accident, but the damage was devastating.
So these were the steel beams that you had to scrape melted what off?
Yeah, so these were the steel beams, which starts here and goes all the way through the levels of the convention centre and then 4 levels of car park, which had to be scraped back after the fire. So really, really big piece of work.
SkyCity's chairman Julian Cook took us inside, accompanied by SkyCity's new CEO, Jason Walbridge, and the project managers. Jason only started in the job recently, returning home from Las Vegas.
Really only sort of dawned on me as I've actually visited and come through the building, just how significant a structure it is going to be for Auckland.
SkyCity and the construction contractor Fletcher Building have had a tense relationship. They've been in a stoush over liquidated damages, effectively millions of dollars in cost overruns that began before the fire.
A lot of workers on site, hey?
What would be 1,000 a day? 850? Yeah, 850.
It's a big labour cost. Huge. Yeah, it's huge. It's been the biggest in the country.
Very expensive.
But progress has been made. Signs of completion are almost evident.
3 different entries for this building. You've got address at Hobson Street, address at Nelson Street, and an address at Wellesley Street. That allows you to separate groups out who are using the centre and give them different arrival points.
They're hoping this site will welcome 33,000 international visitors to major events annually, transforming Auckland's economy. It's revenue SkyCity desperately needs. In the last financial year, it made a net loss of $143 million, with earnings down 16.7%. It suspended dividends and investors are unhappy, as are regulators. After failing to help a problem gambler, SkyCity was forced to close its Auckland casino for 5 consecutive business days in September, costing it millions in lost revenue. That's on top of paying $78 million in fines, domestically and in Australia, over anti-money laundering compliance issues. Its share price is hovering close to its lowest point, as investors reset their expectations on what an entertainment company in this environment can earn. I sat down with Chairman Julian Cook to discuss the disappointments and if the company will ever return to its former glory.
Julian, good to see you. Thanks for doing
nice
this again.
to see you again. Thank you.
This was actually your idea, so thank you very much for having us in.
Our pleasure.
I can't believe it was a year ago that we did this last time. It feels like a lot's changed, especially in this business.
Well, there's certainly a lot of water under the bridge in the last year, and I think, since we met last time, we had the Department of Internal Affairs take us to task for anti-money laundering breaches and host responsibility breaches here in New Zealand, which we knew we had weaknesses in those places, but they did their work thoroughly on us and pulled us up where we were quite rightly short. But I think encouragingly, actually, we've got through this year and started to tick quite a few things off. So we've got a new CEO, we've got a new CFO, we've settled the DIA AML case, we've settled the DIA host responsibility case, we've settled our Austrac fine, we repurchased a car park which we were about to go to court for, yes, which was very messy. That has been repurchased. So I think actually the business is, whilst it's still, there's still some stuff ahead we need to work through. We're in a much better place. We've got a good team. We've got a really good plan to take us forwards, and we've just got to get on and do it.
So effectively, excuse the pun, but you were dealt a pretty poor set of cards. You've now played almost all of them now. There's not much regulatory overhang, you'd say?
There's not. We have one to go. So we are still, there is an inquiry in South Australia being run by the regulator.
The review, right?
Yeah, it started in 2022. It was put on pause. And now they're reopening that to make a determination towards the back end of this year, early next year. So look, there's a possibility that that is not favourable, but I would say in South Australia we've got a completely fresh management team on that property, which was from about March of this year. We've got a good program of work, which is a 3-year program of work to take us to where we need to be. That program of work's been signed off by the regulator and by our monitor. So we're just focused on getting that done and fixing ourselves up.
Given you can largely look in the rearview mirror on most of this regulatory stuff now, what would you make of the action, both domestically in New Zealand and also in Australia? How would you sum up the tone of the action against this industry?
Well, I think it was well deserved, to be blunt. And if you look back, I mean, we've spent a lot of time looking at, well, why did this happen and how did this happen? Because without actually properly interrogating that, you can't get on the front foot and deal with it. Whilst you don't want to agonise on the past too much, you want to focus on the go forwards, but we'd look at it and go, well, there was just a lack of focus on compliance, there was a complacency, the world changed around us, so money laundering got a lot more sophisticated, we didn't really keep up with that, and at its heart, compliance started to slip back behind profit in terms of priority, which it shouldn't be. It should be number one, and then comply, and then go and make some money. So the last 2 to 3 years is about putting that back to where it should be, and then taking it.
Well, now after all of this action, compliance is having to be first and foremost, as you mentioned. How should investors think about this? Because I assume that industries like entertainment, so you call this, they're now going to have to over-index on compliance. It's an enormous cost. How is that going to impact returns, expected returns from this industry going forward?
Yeah, look, there's absolutely a cost, right? So you look at the size of our compliance teams, we're up to around 110 people. We would have been 20 to 30 people, say, 3 or 4 years ago. Those team sizes will probably grow for a little bit more, and there's a huge system and risk investment going through the business. So, number one, yes, more cost in. Number two, whereas 5 or 6 years ago, we would have had customers who might have had more problem indicators for problem gambling, or might have had more issues around money laundering. Those customers are no longer in the business. Like they are out and they are gone. They will not be coming back. We do not take any offshore junket business anymore. That business is gone. So there's a revenue impact in there as well.
Well, because on that, the junkets were pretty lucrative, weren't they?
Yes, they were. There was also a lot more risk you took with them as well. So you did, like, the reality is that sometimes these guys would come and win, right? And
I thought the house always won, Julian.
well, in the long run, that's the plan. But in the short term, like, these guys could actually come and win quite substantially. So it wasn't as easy as you think, but there was definitely a fair bit of money in it. That's gone. So look, you've got a cost impact, a revenue impact. But when you step back, the business is now a much safer business, which will be able to hopefully continue to hold as licenses. Like, the licenses were at risk, right? And that is the most valuable thing with these businesses, is our license to run this place and run it properly. So we'd go, well, actually the businesses are safer, right, which is a good thing. Second thing, there is actually technology coming which will make some big changes. So we will be bringing in mandatory carded play in New Zealand next year, and then into Adelaide in the following year. But fairly simply, it means if you want to play, whether it's a machine or a table, you have to have a card. We've ID'd you, we know your address, you insert that card into the machine. And so we know exactly how long you're playing for, exactly how much money you're spending. If you hit your time limit of the maximum time, the machines will just shut off, right? And so that just gives us a lot more control in terms of what's happening in the floor, but it also will actually help from a cost perspective as well at the moment. I mean, we have a large part of the compliance teams, the host responsibility teams, who are roaming our floors looking for people who are staying too long. So all of a sudden that becomes a lot easier.
But there is going to be a revenue impact on mandatory carded play coming in. I understand that at the moment carded play is like 65% of your business in New Zealand, 70% in Adelaide. So what would the potential revenue impact of this change be?
Yeah, so look, the carded play in New Zealand, and by carded play we mean someone who has already been ID'd, has a card and can come and insert that into the machine. And New Zealand is 65% of the business here. So those people will just keep doing what they're doing. Like there's no change for them.
Okay.
So we're really just talking about the other 35%. And so for those people, yep, they will need to go and be ID'd, we'll need to see their address. It's a pretty quick process these days. We'll give them a card and away you go and play. So we do think there'll be some impact on that. Maybe we're looking at a 10-15% decline for a period, but our expectation is over time people will get used to it. Maybe you came to this casino the first time and you had other things to do and you didn't want to get a card at that time, but the second time round you will get a card, and slowly people will get into the swing of things and will hopefully normalise back to normal.
Speaking of normal, the economic environment at the
Yes,
moment
yes.
is pretty abnormal.
Yeah.
It's difficult out there. Entertainment is not on the menu for a lot of people in this cost of living environment. How is that impacting this business, and when are you perhaps picking a recovery now that we've seen at least one, if not another, soon-to-be interest rate cut?
Yeah, well, when is the recovery is a $64 question, isn't it? So we saw probably from October last year, we saw the first signs of that hitting our business here. You'd think that gaming was typically a bit more recession-proof, but we could see the patronage was holding up, but spend per customer was definitely starting to drop. And
Sorry, just to jump in on that, why would you think that gaming would be recession-proof?
That's just traditionally how. So,
Wow.
yeah, normal hospitality will be a bit more cyclical, but gaming is a bit more recession-proof.
Incredible, okay. Recovery then?
Well, we're not seeing it yet. I mean, I would look at a few sectors around the country and would say this is tough times. We probably haven't seen this since the GFC. I mean, since this is no GFC, but this is pretty tough times out there. So, probably, despite the fact there are interest rate decreases, have happened and will come through next year, we're probably not picking until back end of next year.
Does it surprise you then, and did it go against your modelling that this economic environment did impact gambling, given historically, as you mentioned, it hasn't?
We were not expecting it, no. But I think what we were not expecting is just the depth of the downturn that we've seen, yeah.
So recovery then, what, 2025, late stages of 25?
Late 25
If we're lucky?
If we're lucky, yeah. Yeah.
I want to talk about what's next door. The New Zealand International
Yes.
Convention Centre.
Yes.
It's still not open. The Horizon Hotel is, which we're going to go
Yes.
and see soon. I'm looking forward to that. What's happening with it? And how far over budget and over schedule are we now? Because forgive me, I've lost count, Julian. I'm being serious. I'm not kidding.
No,
I've genuinely
no.
lost count.
So have we. So budget. So firstly on budget, we have a fixed price contract with Fletcher's. So the budget for us is still the same. That has not changed. It's no secret that Fletcher's have run over cost on that project. It's no secret that historically there have been significant issues for Fletcher's on that site, and it's also no secret that that has cost us a lot of money, the delays which have happened. However, credit where credit is due. For the last 2 to 3 years, Fletcher's have been running a good operation over there. They've got a great project director, a great team, and they're saying to us that will be handed over to us in the first half of next year. So we'll take you through it later. You'll see the progress that's being made. We're really excited by it. We think it's going to be a game changer for for this business, but actually for Auckland generally.
I saw that you said in the annual shareholder meeting today that there is, quote, a lot to be excited about at SkyCity. Please tell me, other than the NZICC, what is there that you're excited about here, Julian?
Well, I think things that get us excited, firstly, we will get over these regulatory issues and we will have a much better business for it. So I think, whilst some people wouldn't get excited by that, I will. The second thing is the NZICC is really going to change the shape, I think, of this business, but particularly Auckland, that can take up to 4,000 people conferences. So it's going to be a real game changer in the kind of events and hosting that we can do in the city. And then we look at the online business. So government is, coming forwards with online regulation. We talked about the beginnings of it last year. They've, now said they are going to do it. There's legislation being drafted, so we sort of would like to be a part of that, and I think that'll be quite exciting as well.
You're probably quite excited now that you don't have to be as operationally involved in this business, because while there was no CEO, you stepped in. You were working here how many days a week?
Well, I was around 2 days a week.
Which is a lot for a chairman. It's more than a chairman's supposed to do.
Well, it's a lot for me. Well, I'm very excited by this, actually. So, we've got Jason in as new CEO, we've got Peter Fredrickson and both Kiwis returning here back home as the CFO. These guys are going to do a really good job, and we've seen some really good stuff from them, and I'm quite excited by letting them be able to do it and just step back and govern as the chair should.
You've quite literally brought in the army because Jason is ex-military.
Yes.
Tell me about his capabilities. Because he's from Vegas. He spent the best part of his career in Vegas.
Yes, he spent the last 20 years, I think, in Vegas. So he's a Kiwi originally. He was in the army, actually, a long time ago. He's got a couple of daughters back here. He has been around 20 years in the gaming industry. So started for Aristocrat. So they manufacture the machines. So if you go onto our floor, you will see a number of Aristocrat machines around the place. So knows gaming really well, and for probably the last 4 or 5 years has spent a lot of time in the online space, so been doing work for various people in online gaming, so that's obviously quite important for us going forwards, and so I think some really good skill sets that he brings back to us. Yeah.
Online gaming is something that SkyCity's been pushing for a number of years now. Where is the legislation at with this not so new now government, and what's the potential revenue opportunity that you see in that?
Well, the online market in New Zealand it's a bigger market than you think. So it's nearly the same size as all of the land-based casino and club gaming in New Zealand. So
wow.
Yeah, big, like bigger than you think, and it grows. And currently it's an unregulated market. It is one of the last unregulated markets in the OECD. It is effectively a Wild West out there at the moment. So government has said they want to regulate this, government has said they want to tax this, so we encourage these things. That is sort of working its way through government and cabinet at the moment, the shape of how that regulation is going to work. There has been an initial release from the Minister for Internal Affairs around what that sort of regulation package looks like. And I think the focus for the government and the Minister has been, like, New Zealand has a sort of public health approach to gaming, which effectively means, look, people should be free to game. A lot of people have a lot of fun, but equally there's an acknowledgement that harm can come from for some people, right? And so it needs to be controlled and done in a considered fashion. And we really encourage that approach, and we'd actually like them to go sort of further down that approach. So things that we think really need to be considered is the number of licences. We don't want to have a sort of free-for-all in the market out there. We think we should have a smaller market, less licences, less marketing, less advertising, much tighter anti-money laundering controls, and much tighter controls around host responsibility and problem gambling.
Fewer licences, aren't you one of very few? Isn't SkyCity not a monopoly, but almost in this market?
Well, obviously we don't have an online licence, right?
Right, you mean specifically in the online
Just
place.
specifically in online, yeah.
Because historically you would have been losing revenue to online gaming, I imagine. Do you have a figure? Have you done any research on that internally?
It's very hard to tell. Like, it is quite a different experience. Most people will play on their phones. Maybe a third of the people or less will sort of play on a desktop. So there is some crossover between the two markets. How much of that has drifted out of our business and onto online is very difficult to tell. I mean, we haven't seen revenue declines, right? But quite a different sort of product.
What would the balance sheet have to look like beyond that for this company to start paying dividends to investors again?
Well, look, we acknowledge, like, shareholders have had a pretty rough time with this business, right? We've had the share price consistently declining for a few years. We've paid a number of large fines to people, and now we've stopped the dividends. So, I mean, that's pretty tough for shareholders. However, it is important that we put this business on the right footing going forward, so that we have a capital structure which isn't under too much strain. So we definitely won't be paying for FY25. Look, hopefully we pay beyond that, but what we really need to see is we need to see a path to just reduce our leverage slightly over time. We're currently sitting on a BBB- rating. We want to see ourselves be able to get to BBB flat. Now, we don't have to get there before we pay dividends, but we just need to be able to see that path.
What would debt to earnings look like on that path? It's currently 2.3 times
So
with 663 mil of debt.
It'd be in the low twos. The low twos, yeah.
So you're almost there.
We're almost there, but that 2.3 was based on earnings for the 24 year, and earnings are coming back in the 25 year because of the economy and because of the investment in compliance. Yeah.
What would you say to investors that have stuck with you? Because investor appetite in this industry is, as you've mentioned, waning.
Look, it is, but it's horses for courses. We get a lot of interest from from people in New Zealand and offshore. I mean, look, we have a lot of long-suffering Sky shareholders. That is the reality. I, in my small way, am one of those shareholders as well. So I'd like us to return to better times. Look, I would look at us and say, when you look at our valuation on the market, if you assume we can deal with our regulatory issues and put those behind us, then we're looking pretty cheap.
Thanks so much for your time. This was fun.
Thank you.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.